There has been a rash of big name, big time stocks that are actually at 52-week lows. Some are controversial stocks for sure, and some you may not have even known that they're at 52-week lows given the massive rally we've had this year so far. So I'll tell you for each stock if it's a massive opportunity or if it's a huge trap, and I'll tell you if the price it's at currently right now today is enough to get me interested in these stocks. I just ask that you gently tap that like button and consider subscribing too. It's super easy to do if you like the truth without the hype. And I appreciate the few who left me some great constructive criticism on my last video, and I just want to thank you guys. That is really helpful to me as a creator. Because we all get told no matter what's in every video that every video is clickbait and every video sucks, and why are you promoting anything despite the fact this right here is what YouTube pays me in a month? That's right, and after taxes, that's about $1,200 in a month, which just barely covers groceries at this stage with inflation and everything else. There would be virtually no creators out there at all, except for the couple of big ones that are out there, if we didn't actually take on sponsors and have our own groups and have stock analyzer tools and stuff like that. They're necessary to make this a viable business for us small creators. So I do thank you guys for that constructive feedback, and please keep it coming because it's really hard to tell on our end whether or not we're on the right path or not. Now back on track. I don't care about stocks being at 52-week lows or 52-week highs or anything else like that. It's completely irrelevant because a stock can be at a 52-week low and still be significantly overvalued, and vice versa. A stock can be at a 52-week high and still be significantly undervalued. I'm not trying to create controversy or anything else like that, although the last two stocks we're going to talk about are absolutely controversial and they're divisive stocks. But hey, they're at 52-week lows, so we're going to talk about them, and I'd love to hear you guys' opinion as well down in the comments section on them. So the first stock we're going to discuss is General Mills. And guys, this is actually crazy. This stock has been on my watch list since 2021. And no, not kidding. 2021, you can go back and look at my group. It's documented there. It was on my watch list way back then. And man, 2022, here, I'll show you guys the chart. 2022, it went on an absolutely epic run. So I wasn't able to buy. If I would have been able to get my price target back then, I'd be sitting on a lot of shares. Obviously, they'd be way up. And of course, as you see right there, the stock has fallen way down. But the point being, I could have collected that dividend the entire time last year, but I didn't buy any shares because it's been overvalued for that long. So that's right. I've been sitting on my hands wanting to buy this stock for over 2 years now. And it's finally getting to that point where I may be able to finally buy some shares. Yeah, I wanted to buy shares last year, but I needed to be patient because of the valuation. And instead, the valuation on stocks like Meta and Google and, Tesla and Palantir and a bunch of other stocks like that were just at ridiculously low valuations. So I had to put my money there instead, and I'm very happy I did. But that's why patience is so important in investing, because you have to be willing to wait, not necessarily buy what you want just because you want it, but be willing to wait on that valuation to come back in line and take advantage of whatever the deals are that the market gives you in the first place. Valuation is what matters in the end, so let's talk about that next. So to me, right now today, despite the stock being down 30% from its high just back in May, this stock to me is just now entering fair value with a PE right around 15 or so, as you can see right there. I would love to see it get down to a PE of 12 or so, because that right there would really be a discount on this stock. However, at its current range and in its current valuation, it absolutely is starting to tempt me, and it may be time for me to start buying the stock because it is at its fair value. And then of course, if it continues to fall further, I'll continue to add more and more heavy as it falls. Or maybe I did already add it, which if you want to see those buys like that in real time, make sure you take advantage of the sale that ends today for my group, where you get that price for life as long as you stay a member, and the price is going up forever after that. Not only do you get my buy and sell alerts, you get my complete watch list with price targets for every stock I'm looking at. You get access to 5 courses for free, the stock analyzer tool for free. You get access to the best 6 and 7 Discord. You get direct access to me. You can slide into my DMs, talk to me on our live Q&As we do weekly at a minimum, and a whole bunch of stuff like that. So make sure you check out the pinned comment down there and take advantage before the sale ends forever and the price goes up forever. So on to number 2, and that would be Dollar General. And it was another stock that just had an absolutely epic year during 2022, when basically every stock that we all wanted to own had a really, really bad year. There it was having an epic year, but now it has fallen hugely as well, just like the first stock we talked about has. And quite frankly, if I would have looked at it last year at all, it was overvalued by every metric in the world you could look at last year. So that to me is what matters. Let's look at valuation now, because who cares what the valuation was last year? Let's see where the valuation is now after a 50% drop in the stock. It's trading at just under a PE of 13. And as you can see right there on the chart, it has not traded this low in a very, very long time, maybe even ever. That was as far back as I went, was 2010. This is trading extremely cheap. Now, just being cheap, even if it's based on valuation, is not a reason to own a stock or to buy a stock or think that it's a great deal or whatever the case is. You have to understand the reason why. What is going on there? What are the problems with the business? Because there are problems with this business. If you listen to the last earnings call, they have, problems within the business. They also lowered their guidance significantly, and we kind of need to see what's going on with the stock. What else is there that management discussed that we need to take into account? So it may be time to start adding to this stock. It may be an incredible deal, but you have to put in that work to understand the why behind what's going on. And that's part of doing due diligence on a stock, is you got to understand the why. What's the plan to turn it around? What is management saying about that turnaround plan? Those are all things to me that I haven't heard yet. So for me, I'm out on this stock. So until I have clarity and all that sort of stuff, for me, I'm not interested in this stock, even at this price, because if there are other problems, the stock could go a lot lower, as we saw last year, where we thought, oh, there's no way this stock can go down any lower. And then Wall Street basically said, hold my beer. Let's push this stock lower. So stock number 3 would be Pfizer. And it's another stock that had an incredible 2022 that's basically just been cut in half since it hit its all-time high. But you know me, I don't care about whether it's cheap or not. I care about valuation. So let's take a look at the valuation right there for Pfizer stock. And as you can see, it's trading at a 10, which is not bad at all for Pfizer. So to me, this is maybe right around fair valuation or so, but you can also see on the chart there that it sometimes gets down into the 7s. Sometimes it gets all the way down to the PE of 5 in the recent history there. So it's not like this is super cheap steal deal territory either. So I'm not sure I see any big catalysts coming in the near future to push the stock price up. So for me, given where it's at in terms of maybe being fair value, maybe not, at its current levels, I honestly am not interested in looking at this stock or looking any further. But it also brings up a great lesson that you have to understand as a long-term buy and hold investor. And that would be, you do not buy stocks and industries that you do not understand in the first place, or you do not, basically outside of your circle of competence. You don't buy stocks that are outside of your circle of competence because you don't know what you really own. You don't understand the business model. You don't understand how changes in, either the macro environment, internally with the company, with regulation, whatever the heck it is, you cannot accurately understand how that's going to affect the bottom line, which of course will then, extrapolate into the eventual stock price. And we've all made the mistake before. I've made the mistake before multiple times to buy something that I didn't really understand because I thought it was cheap. I thought it was a great deal or whatever. And whenever it inevitably falls because you can't time the bottom, guess what happens? You're left in a huge lurch because you don't know, oh my gosh, did I pick a bad stock and I need to get out? Or is this an incredible opportunity and I need to average down? You cannot accurately ascertain the right answer to that question if you do not understand the company, the business model, everything else in the first place. So for me, on a stock like Pfizer, I just don't understand how, the process works in regards to bottom line, how it moves the stock price, when a drug's approved, when, this policy happens, when that policy happens. I have no idea. I've never been able to figure it out. It's just something that's always, I just haven't had a firm grasp on that. So I choose to stay away from a stock like this. So even though I don't like it necessarily from a valuation standpoint, I think there could be more that we could get out of it. I also just don't like it because I don't understand the business itself. So make sure you don't catch yourself in that trap of buying something that you do not understand in the first place. So on to the controversial part of the list here. And you guys let me know down in the comment section your thoughts on these stocks. But stock number 4 would be Walgreens. And this is a stock that basically it was just making, it seems like forever, it's just been making 52-week low after 52-week low after 52-week low with really no end in sight. I mean, I don't think there's any technical indicators that you can really get to. It's already broken through all of those. There's just not a whole lot there to stop this fall from happening. And unlike the rest of this list so far, it didn't have a great 22. It was an ugly 2022, which just has kind of carried into an ugly 2023 as well. So you have to account for that and understand there's something more going on there than with the other stocks. I mean, we just had the CEO leaving abruptly, which is highly unusual when you're in a turnaround situation like that. And there are actual business problems with Walgreens itself. And I do think that a dividend cut, now I don't think they're going to get rid of it altogether, but I do think a dividend cut is in the offing, especially with the dividend yield being so high right now. I think that that is a very distinct possibility that that could happen. But let's look at the valuation, because at an 8% dividend yield, 9%, whatever the heck it ends up being by the time it stops falling, you're looking on an incredible opportunity if they're able to actually turn it around and just kind of get back to pre-pandemic levels. They don't have to get back to anything crazy. Just get back to where they're back in the positive per se. That right there would make it a great buy if you're looking to add to a dividend style stock in your portfolio. And looking at the chart right here, looking at the valuation from a PE perspective is honestly kind of useless because they're losing money. They've had 3 straight quarters of big losses on the EPS side. So that's what I mean by, I think there's business problems. 1, there clearly is. And 2, why that dividend in terms of, I don't think they'll cut it completely, but in terms of it going away a little bit to help out with this in the short term, I think it absolutely is a possibility that it gets cut in half or, somewhere right up in there in order to kind of help out that bottom line and get them back over to the positive side. For me, if you're willing to look out 5 years and stomach this craziness that's going on right now and stomach the potential cuts in dividend and the naming of a new CEO and just a lot of the consternation that's going to go on in between here, you could have an opportunity here. And this is absolutely in the buy range for myself, because when they turn that thing back around, if they're able to turn it back around, you're going to see that stock price move up commensurate, because it is a good stock long-term and has been a great long-term dividend stock for decades. But you have to make sure you're accounting for all the risk in this stock and make sure you understand those very, very intimately, because this is a stock that could go nowhere for a really long time and could really be a drag on your portfolio. So you have to understand those risks before even thinking about opening up a position in this stock. And on to the last stock we're going to talk about today, and that would be Disney. And guys, I know it's a controversial stock for a lot of different reasons that I'm not going to get into all the reasons why Disney's having issues right now. But looking at it from a business perspective, they're having significant business problems. That's why they brought in Bob Iger, who then had to extend longer because he realized all the problems that were actually there, because it's kind of a weird dilemma. I mean, the parks are booming like no other. They're just printing money like crazy. But then your streaming service is losing all that money and more on the opposite side. So you're basically bleeding money out of one end while you're printing money on the other end. And that's a significant problem, especially when we look at the valuation here in just a second. The valuation went from, hey, basically an old style legacy type business, that right there was what it was valued as, to all of a sudden it was now into the streaming platform, which of course streaming platforms and streaming companies in general command a higher valuation. So it was kind of like, hey, they're trying to shift the business from this legacy style business, basically into the, current date style businesses. And therefore Wall Street was willing to give them a higher, valuation, a higher multiple than they would have if it would have just basically stayed a legacy style business. But when I look at the PE of Disney, you can see right there, it's still really, really high. And that's honestly because just the earnings have been so poor that number is so ridiculously high. But the point being, if they are able to turn it around and they're able to get things moving in the right direction again, that PE will just naturally come down without Wall Street having to sell it off anymore or anything else like that. Now, that doesn't mean Wall Street isn't going to sell it off more. I would agree with that completely. But that is one of the reasons why that valuation is so high. And keep in mind, if they're able to keep themselves kind of on the forefront of the streaming thing and make that into a huge net positive instead of a net negative like it is right now, that along with the parks will honestly put Wall Street in a spot where they're going to give it a little bit of a higher multiple than they would if they just go back to being a parks and, basically a physical brick and mortar business like they were before. But it's a long road ahead, and there are a lot of massive moves that need to happen in order for this stock and this company to get back on the right track. So for me, I have it on my watch list. And if they get back to just basically, the pre-shutdown type numbers, this stock right here at this price today is going to be an absolute steal deal. However, that's a big if. So that makes this a speculative play, which means I need to manage the risk. So if I'm going to add this stock, I need to make sure I'm managing my position size and kind of keeping it small until we start seeing some actual movement with management and some actual positive momentum in regards to earnings, not stock price, in regards to earnings, for me to actually start putting more money into Disney stock. If they're not able to do that, it's going to be a very long, difficult road for Disney. Which, if you want to see those buys like that in real time, make sure you take advantage of the sale that ends today for my group, where you get that price for life as long as you stay a member, and the price is going up forever after that. Not only do you get my buy and sell alerts, you get my complete watch list with price targets for every stock I'm looking at. You get access to 5 courses for free, the stock analyzer tool for free. You get access to the best 6 and 7 Discord. You get direct access to me. You can slide into my DMs, talk to me on our live Q&As we do weekly at a minimum, and a whole bunch of stuff like that. So make sure you check out the pinned comment down there. Take advantage before the sale ends forever and the price goes up forever. And click this video here if you want to see exactly what I'm buying in this market, and click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.